Let's talk about something that's hitting the wallets of over a billion people. We're talking about the historic fall of the Indian rupee. It's a really significant and kind of worrying milestone for India's entire economy.
Okay, so let's just get right to the headline number. For the first time ever, the exchange rate has broken through a massive psychological barrier. One single US dollar is now worth more than 90 Indian rupees. And this isn't just some number on a trading screen, it's a huge signal that some major economic shifts are underway.
So that leads to the big questions, right? How in the world did the rupee get to this record low? And, maybe more importantly, what does all of this actually mean for you, for businesses, and for the country as a whole? That's what we're going to break down.
All right, so to really get to the bottom of why this is happening, we've got to start with India's biggest trading partner, the United States. And we have to talk about this powerful economic tool they're using called a tariff. Just so we're all on the same page here, a tariff is basically a tax. A government slaps it on goods that are coming into the country from somewhere else. You can almost think of it like an entry fee for products. So, when the US puts a tariff on Indian goods, it suddenly makes those products way more expensive for Americans to buy.
And the scale of this is, well, it's what really matters here. Right now, India is facing the highest tariffs from the US of any country on the planet, a staggering 50%. This has put an incredible amount of pressure on Indian companies trying to sell into that American market.
And you can see the fallout from those tariffs right here. With their products suddenly so much more expensive for Americans, Indian exports to the US have just plummeted. We're talking about a massive 28% drop. That is a huge, huge blow to what was a really critical source of income for the Indian economy. So what do you do when your number one customer makes it really hard to sell them your stuff? Well, you have to pivot. You have to find new customers. And that's exactly what's happening. Indian exporters are scrambling to find totally new markets all over Europe, Africa, and Asia.
Okay, but here's where the story gets a little more complicated. Because you see, a falling currency isn't actually bad news for everyone. As we're about to see, this kind of situation creates some very clear winners and some very clear losers, all inside the same economy. And this is the real tension at the heart of it all. For the average person in India, a weak rupee usually means some kind of financial pain. But for one specific group, the exporters, it can actually be a lifeline. It can be a real secret weapon, especially right now.
Let's break down what this feels like for most people. Thinking about a trip abroad? That just got a lot more expensive. Need to buy anything that's imported, like electronics? That costs more now too. And a fall this fast often means higher fuel prices are coming, which hits your daily commute. At the end of the day, the money you have saved up just doesn't go as far on the world stage.
But now, let's look at the other side of that coin. For all those exporters trying to break into new markets, a weaker rupee is actually fantastic news. It makes their products cheaper for foreign buyers, which makes them way more attractive. It gives them a competitive edge that they absolutely need right now.
Now, if you've been paying attention to this story for a while, you've probably heard a particular explanation for the rupee's fall in the past. But things have changed, and that old argument, well, it just doesn't really hold water anymore.
Just a few months back, the official line was that this wasn't really about the rupee being weak. The argument was that the US dollar was just getting incredibly strong, and that made every other currency look weaker by comparison. And to be fair, there was some truth to that at the time. But this time is definitely different. That whole strong dollar argument doesn't work anymore, because now we're seeing the rupee lose value across the board. It's not just weakening against the dollar, it's also falling against other major players like the euro and the Japanese yen. And that signals a much broader problem.
And this timeline, wow, it really shows you just how fast this has all happened. A year ago, we were at 84 rupees to the dollar. It took a while to creep up to 85. But the jump from 85 to 90, that happened in just 5 months. That speed, that acceleration is what has so many economists and citizens really concerned.
So all of this leads us to a final and maybe the most fascinating question. Is this rapid drop just the market doing its thing, or could this actually be part of a deliberate and very risky economic strategy?
This is where India's central bank, the RBI, comes into play. See, the RBI has a ton of power and tools it can use to step in and prop up the currency. But right now, it seems to be sitting on the sidelines. And that inaction has fueled this growing theory that maybe, just maybe, the government is intentionally letting the rupee fall to help out those exporters.
And this whole situation leaves India at a major crossroads with some seriously tough questions to answer.
Is there any hope of getting a trade deal with the US to get rid of those tariffs? If that's not on the table, does the rupee have to just keep falling to help Indian products compete around the world? I mean, this could force a fundamental change in the country's entire economic strategy.
And that right there is the billion-dollar, or maybe I should say the trillion rupee question. It's an incredibly high-stakes balancing act between helping out a vital part of the economy and protecting the financial health of everyday people. The path India chooses here is going to define its economic story for years to come.